Hey everyone, this is Corey from Sims Investment Management, and this is another monthly market update. I hope everybody's been having a great spring so far. In Cincinnati, we're coming out of the spring showers and entering my favorite time of the year in May, when right before we get to the super humid hot weather, but these nice cool mornings. So this month I want to talk to us a little bit about what the market did in April. We had a great month. It was up 5% in the S&P 500. The market as a whole is up about 11% so far year to date. And why I think that's really important to talk about is, historically speaking, the market averages about a 10% rate of return per year. That's what the S&P 500's done on average since the 1920s. So about 100 years of history. And I've said this before, it's almost been hard not to succeed with investing if you think about the past 100 years. The common denominator, if you did not succeed, would be yourself, right? Because the market has historically and consistently over a 100-year period gotten you on average that 10% rate of return. Now we've had volatility and ups and downs in the meantime, but it's usually people that try and time the market when they don't have success. Morgan Housel, who's a columnist, had a wonderful quote this past month in his article that was titled "Too Much, Too Soon, Too Fast." And he said, virtually all investing mistakes are rooted in people looking at long-term market returns and saying, that's nice, but can I have it all faster? It's because it's kind of human nature, right? A lot of things that we do in life feel really good in the short term, but in the long term can have really drastic downside and be a mistake in the long run, right? It's human nature. It's okay for us to feel these certain things, but a lot of things we can't act on it, right? That's when we get ourselves in trouble. What we're seeing in the past few months is we're really seeing this FOMO trade, and people have this fear of missing out. In the past 5 months, the market has seen more money come into it in stocks than it did in the previous 12 years combined. That's pretty fascinating. What's even more fascinating about that is that humans waited, the people that have been getting back into the market, they waited until the market had gone up 4 times before they finally decided, you know what, I want to get back into this. It's because they're trying to time the market, or they're letting their fear take over. We talk to our clients about this all the time and why that's just a terrible idea. You don't make investment decisions with your emotions. You make them based off of a plan. The other thing that I keep trying to remind clients about is we're up 11% for the year so far. It is completely normal to have about a 14% decline in the market in any given year. And why I think that's important is even if we give up all 11% that we've gained so far in 2021, we would be right back to where we were at the beginning of the year. I'm not saying that's going to happen. Historically speaking, it has. Maybe it will, maybe it won't. We can't time it. We're not going to try and time it. But if it does happen, just be prepared and it'll be okay. We'll get through that downturn and then we'll move forward. I don't see us necessarily moving in any type of recession or bear market in the near future, because typically those things happen when it's hard for people to get access to cash or capital. And right now we're in a very, very liquid, accommodative market. And unless something really hits us out of the blue, I don't see that shifting or changing anytime soon, especially with some of the fiscal and monetary policies that have been issued recently. So that's really it for this month. I want to take an opportunity to just say Happy Mother's Day to all those mothers out there. Thank you for everything that you do. Thank you also to our clients for your trust in us and your friendship. And if you have any questions, please don't hesitate to reach out to us, and feel free to share this video with someone that might need to hear this message. Thanks, and we'll see you next month.